What an intense day in the markets. We needed to talk about it. I have some interesting things to show you in this video. I am Dr. Stock, Doctor of Education, and if you're a farmer with boring pigs, you better have barn doors and not circular portals because you can't fit a square pig through a round hole. We might be going back to the 1950s with the greasers calling somebody a square in terms of boring, or at least pigs in this case. But I digress. Let's move on to the technicals that I have to share with you. I'm actually going to, I stripped these things down. I got rid of all the old technicals. I'm going to show you just some of the ideas that I'm kicking around and just some of the things that I'm going to think on over this weekend and come out and share with you leading up to the market open on Monday. So I have QQQ, IWM, SPY, Bitcoin, Tesla, and NVIDIA to share with you in this video. Monthly charts on each one of them because it is crazy how similar they are, the way that they sort of match up and also ways that they're dissimilar. So without further ado, so here we go. Clean, easy charts, starting with QQQ. We're just going to talk peak to trough, Fibonacci's, just a little bit interesting things and some thoughts for me for the weekend before I come out and talk with you about next week and about how I think that could look. So if we go from trough to peak on this thing, look where we sold off to. Pretty much smack dab on the 50% retracement level. If it was the Qs alone, that wouldn't be all that fun or significant, just kind of neat. But if we go over to IWM and we do the same thing and we click down here from trough and go up to peak, once again, we got almost exactly on the 50% Fibonacci retracement level. For SPY, this one, a little bit different for us. We're going to go to Fibonacci retracement again, and we're going to go from trough up to peak. And what you'll see is that we were actually closer. Let me make an adjustment there to the 38.2 level. And so I thought that was kind of interesting. Maybe we didn't get as drastic of a sell here because we don't have the overbought nature of the tech stocks in there, whereas a little bit further correction with the tech stocks for the Qs. But something that I thought was really interesting is that if we, instead of going the typical trough to peak, that if we went from peak to peak, so that peak over to that one, then we actually hit the 50% Fibonacci retracement level pretty squarely on the nose. Matter of fact, I can even drop that down a little bit, and that one's a little bit high. And there we go. So just barely piercing through that. Now, peak to peak, I'm not sure that that's a thing. I've never really used it in that way, but I will tell you that Fibonacci retracements are something that end up being iterative over time, that you end up repeatedly hitting these key levels as you go back in time and let them play forward. They seem to last for a while, and they seem to repeat themselves, if you will. So I thought that was something that was interesting enough to be worth a mention here, that it didn't really experience the same drop that we had for IWM or QQQ. Maybe it just shows a little bit more stability for the S&P 500 than what we had with the small caps and what we had with the NASDAQ being as tech heavy as it is. So that I thought was worth a mention. So one other thing I'll leave you with for SPY when we talk about what exactly we can see here. If we use a Fibonacci extension on this one, and we go down here from peak down to trough, back to peak, to see what could happen next, look at that. We start to get that drop. Where could it go? It actually matches the drop that we had back over here, which is where you have that trend, and over there, that's that trend repeating. And that could explain why we got that drop to that level that we did, and not necessarily as exaggerated as what we saw with IWM and QQQ. I think that there's a combination of factors, but I think the stability of that versus the overbought nature with the Qs, and then the small caps that we have that are more volatile in general, and generally speaking, I think really does go a long way to explain the background behind the technical differences that we have there. Now for Bitcoin, if we go to Bitcoin's monthly chart and we go from trough to peak on this one, really cool. Once again, much like what we saw with the Qs and also with IWM, 50% retracement level. If we jump over to NVIDIA, here I already have it drawn on here for you, 50% retracement level from trough to peak on the monthly chart as we tended to sell off. So we'll see, do we pull all the way back down to the 61.8? If we do, that can be a significant buy level. Now, mind you, the 50 and the 61.8 are two different places where you can have that significant bounce. Now for Tesla, let's take a look at and see what that looks like when we go from trough to peak for that one on the monthly chart and see where it's taken us. We actually pierced down through just momentarily. We were down below that 61.8 and we were able to bounce anyway, but we're still down below the 50. We gotta overtake that 50, which just happens to be at 205, 206, which also happens to be where our 50-day EMA and SMA are when we look at the daily charts. So that's something really noteworthy for Tesla that it really has its work cut out for it in trying to make that recovery, especially over the typical Septembers that we get, the election coming up, the fact that we have, from what I've heard from the Trump side of things, that he's more, I've heard him say in different interviews, talking down against EVs, and then really talking up the ICE vehicles that are out there, the internal combustion engine vehicles. And then also Elon Musk, though, being part of Tesla and sort of choosing sides, if you will, and coming out and endorsing Trump directly. This isn't a political conversation. This is a market impact, especially Tesla stock conversation. That's something that could still leave us in a place of indecision leading up to the election, especially if it goes Republican to the Trump side. Then it really becomes a question of, okay, yeah, this isn't necessarily good for EVs in general. It could be much better for oil stocks. How is Tesla going to factor into that, being part of more the Green New Deal, clean energy, democratic side of things, which it benefited from back in 2020, 2024. We'll have to see how the election goes. If it goes Democrat instead of Republican, that might be a little bit better for it, at least in the near term following the election. So that's something as a catalyst just to pay attention to. And September, October might not end up being too nice. We're going to have to see how August goes for Tesla. It is possible that we continue to bounce from here after we hit the 61.8 level. That can be a significant area for a bounce. Now, just to slap this on here for you quickly, just so that we can talk about the iterative nature, as I mentioned, the repeating that we see with the Fibonacci retracements. Look at this. When we go out to ultimate peak to most recent ultimate trough that we had, there's a little bit of slop that's in here. But as we continue to drop down, you can see, even though this was in the past, that 61.8 level still ended up being part of it. And I think if we put a Fibonacci extension on that, you would see that this would also come down to be a critical level as well. So this is something to definitely consider as we factor it into our analyses. Look at that. I told you. There it is. That drop that we had there matches the drop that we have here. And then we rip back up. And then what do we hit? We hit the 61.8, and then we bounce back down off of this one. So that can be part of our plan going forward. Now, the thing is that hindsight makes it seem crystal clear and makes it seem easy, but there's any number of drawings that you can put on. Like, they are so numerous, you don't really know which one to go by. Hindsight makes it seem clear, so you got to be careful of people telling you, like, see, look, all you have to do is do this, and it predicts it every time. Well, there's a lot of different predictors that you can throw up there, and you can be a charlatan and claim that you always know. See, my technicals always work out. Mine work out sometimes, and there's a lot of times I try to find confirming evidence, and I try to find confluence across different time frames and across different technicals, and oftentimes it works out. There's times that it totally doesn't. But the way to look at this stuff is, okay, this is what happened in the past. How do we use it going forward? What can we expect to happen from here? And when we have those bigger movements, such as those sell downs or those blast offs, we can use that to better plan going forward. So I got my homework for this weekend. I wanted to share those thoughts with you. I know it's not the most intense conversation, but it is an interesting one, especially if you like technical analysis. And guys, if you want to see my buys and sells, talk with me and my community members, pick my brain, whatever, there's a link down in the description for the Patreon. Click that and sign up for the Discord. You can talk to me over there and also see what I'm buying and selling. And then also, if you want to learn to do technical analysis like I do, you can do so using the link down in the description for that course for Stockmo Academy. And it also teaches the bread recipe, which is a clean, easy, and simple to follow trading strategy that people have a lot of success with. I use it personally. Mo uses it personally. He even has a bread bot over in his Discord, just to toss him a little bit of a plug over that way. And it really is really nice for helping to confirm the technical analyses that you might happen to do, or maybe you just want to give that away to somebody else. I don't know. But that's all out there for you guys. Let me know what you think down in the comments of this video. I'd absolutely love to hear from you. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.